Hello, Santa Barbara and Montecito. My name is Daniel Zia. I'm the founder and CEO of Zia Group here at eXp Realty on the Central Coast. And I'm here with my November real estate market update as part of our promise to be your local real estate economist of choice. So this is the November real estate market update that goes over the October statistics. And it has been a very interesting month. As you guys are probably aware, we've had some interesting things happening in the national economy and the national real estate market. And we always want to be your local real estate voices, helping you interpret that national data and really put it into a local context. So to start off, while we have had interest rate fluctuations, we continue to see a stronger real estate market locally here in Santa Barbara, Montecito, and South Santa Barbara County, compared to many other larger real estate markets across the country. And that's been true to form in all sorts of different shifting markets. Our local market has always been more resilient, less volatile, and frankly, it's one of the reasons why a lot of people choose to invest in real estate in this area, even when there's lower financial income returns, for example, with residential income properties, because that lower volatility in the market. So what we're seeing now is, number one, we're seeing a lower number of sales compared to previous years. And to put that into context, we actually have had fewer sales year to date this year than any other year in the last 11 years. So this year takes the cake for the lowest number of sales year to date in the last 11 years. That is significant, but it's not all bad news. As a case in point, most of our recent listings at Zia Group have all sold with multiple offers and strong over asking sales prices, including single family homes, condos, and residential income properties. There are a few exceptions to that haven't sold in that first week with multiple offers, but most of our listings continue to sell with multiple offers above the asking price. So that's good news. We're also seeing sales outcome variability, which means this is the time where you really want to be working with an expert agent, an agent that is working full-time in the local market and is involved with as many negotiations as possible, because literally the negotiations are different right now, property to property. Some properties are going to sell with a large number of offers and go way above the asking price. Other properties aren't going to sell and are going to need one or two price reductions as the seller adjusts to our current market conditions, and then they're going to have a one-on-one negotiation with a single buyer and concede some in that negotiation process and eventually go in escrow below the asking price. So let's talk about home prices. So home prices have actually nearly doubled since the last real estate market peak in 2005 to 2007. That 2-year range, prices kind of fluctuated up and down. That was kind of our last peak, and then the market declined until the end of 2011 and then went back up and are at the highest point that they've ever been, almost double what they were in that period. A lot of you might be wondering, are home prices going down? Well, that's a little bit uncertain. Well, we definitely saw price appreciation in the beginning of the year. We've had more variability really since July is when we saw a really significant market change in the statistics, which means that really started happening in May or June. That's when the interest rates started to go up and we saw a different market. July was very challenging as far as the number of sales. It was the lowest month of the year, and usually it's one of the best months of the year as the market processed what was going on with those interest rates. Well, what we've seen since then is, even though interest rates have continued to climb until just recently, they dropped down in the last week, but they've been climbing, that hasn't necessarily scared buyers away. Buyers in Santa Barbara are different than first-time home buyers in Phoenix or in different parts of Florida, where a major jump in interest rates really affects home affordability, and a lot of buyers have to get out of the market. In our area, the buyers still have capacity to purchase in our market, even with interest rates up. It's just short-term pain, and most of those savvy buyers are looking at that as short-term pain in the next year or two before those interest rates really come down. So they're buying now, even though they're paying a higher interest rate, and they're factoring in a zero-cost refinance in the next 12 to 24 months to drop that rate down to a lower level. So if they're going down, we're not sure. We're still seeing year over year home price appreciation when you look at the statistics. But when you look at month over month, we are seeing in some recent months, the month over month statistics have been lower than the same month before. When you look at the median sales price in October, you actually saw a 3% decrease in single-family home price compared to a 6% decrease in the condo median home price. And again, that is year-over-year data. So that's a single month over a single month. And we have fluctuations month to month. So I prefer to look at a year-to-date over a year-to-date threshold, we're still seeing, when you look at that, all the median sales price of this year compared to all the median sales price of last year for the same period of time, we're actually still up around 16%. We're hovering right in that kind of $2.2 million range for a single family home right now when you look at the median sales price, which is still pretty phenomenal when you consider that median sales price for a single family home was in the 1.1 to 1.2 range in that 2005 to 2007 period of time. One of the big changes in our market over the last number of months, really since July, is we've started to see the number of price reductions increase. That doesn't necessarily mean that price reductions are going down, or excuse me, that prices are going down. It just means that sellers are using that strategy more as they adjust their hopeful expectation with the market realities. So we have seen 2 to 3 times as many price reductions in the recent months. Now, as far as what home prices are going to do, the number one factor that predicts home prices is the absorption rate. How many months of inventory are there at the current pace of sales for all of the properties to be sold, and there'll be no new properties for a buyer to purchase. Right now, we're at 1.58 months of inventory in the affordable market and 2.76 months of inventory in the luxury markets of Hope Ranch and Montecito. To put that into context, if you go back 30 years in Santa Barbara real estate, we've actually never seen home prices see a sustained decrease in price until there was at least 6 months of inventory. Now, granted, every economy is different. Every real estate market is different. It's absolutely a truth that we could see unprecedented historical elements in our real estate market, but we've never seen a sustained down market with less than 6 months of inventory. So the surprising factor is, though you would expect that the amount of inventory would be increasing, the reality is there are fewer homes on the market today than there have been any time in the last handful of years, which is pretty incredible. To put that into context, if you look at the last 4 years, there was an average of 1,379 listings that came on the market year to date. This year, there's only been 960. So that means there's 43% fewer homes for sale now compared to the last 4 years. So if you're a home buyer, you're kind of being pinched to both sides. You've got higher interest rates to deal with, plus you have fewer selection. It's a little bit of a disappointment for home buyers there. But the good news for sellers is that's keeping that absorption rate lower. That's keeping inventory down. So even though buyer demand is less than maybe it was last year, that the supply-demand economics, which control home prices, are staying pretty constant and staying pretty tight. That's why we're seeing really what I would say kind of a flatness in the market, which we haven't fully encountered that before, which is kind of a newness. Normally, we're going up decisively or down decisively. When you look at, as far as what we're seeing, just some specific examples of what we're seeing in the real estate market, I think in the last 5 listings we brought on, one of them had 8 offers, one of them had 6 offers, one of them had 3 offers, one of them had 2 offers, and one of them had no offers. So on average, on our personal listings at Z Group, we're still averaging about 4 offers per listing. That is not the market statistic. That's just us educating our sellers more on the reality of the market, plus bringing in more marketing exposure and our proprietary marketing strategies to still capitalize on market premium prices, even with this kind of fluidity in our current market. As far as the velocity of sales, that is slowing down a little bit. The last market update was more like the 25, 26-day range. Now we're hovering in the 32-day range to sell a home. Just takes about a month to sell a home. That's still a very fast market overall when we compare it to historically. So we just have this nice balancing or leveling out in our current real estate market. When it comes to interest rates right now, we are hovering in the higher 6s for a 30-year fixed loan. When you look at, when you go down to like a 15-year fix, you're going to be probably in the lower 6s. And if you're going with a 5-year ARM or adjustable rate mortgage, you're in the mid-5s. Again, this is decreasing buyers' buying power, but a lot of the savvy buyers are realizing this is just a short-term additional cost to pay in interest over the next year or two before they do a no-cost refinance. The other thing to keep in mind that's keeping that for those sales prices high is, what's the alternative? You have to have housing, and the reality is you've got rental prices still going through the roof and a really low supply of rentals available. And so whether you're a home buyer or a renter, you're still kind of getting pinched on both sides, which is encouraging a lot of buyers to become, a lot of people to become home buyers rather than stay in the tenant pool. So there you go. That's our market for this. Again, is the November market update covering the October statistics. It'll be interesting to see what happens in the winter months. Keep in mind, we do see inventory tend to bottom out in the winter and buyer demand bottom out, but it tends to be an equal supply. So there really is not a bad time to sell a home. My last personal residence, I actually sold right around this time and around the Thanksgiving time. So in Santa Barbara, with weather looking beautiful all year round, a lot of times even the winter months can be a great time to sell a home or right after the new year. So if you're thinking about it, please do reach out to Zia Group. We'd love to give you a private confidential consultation and help you kind of interpret what's going on in your specific context and situation and help to come up with a plan of action where you can capitalize on the market because there is opportunity in every market, including this one. Until next time, have a good one, Santa Barbara, and happy holidays.